Good evening, everyone. Welcome to Let's Trade Live. So this is Wayne, Head of Research and Education. On behalf of Fullerton Markets, I warmly welcome everyone again to the weekly webinar. So without further ado, let's jump straight to the webinar. We will be talking about highlighting some of the key events or news that has happened in the past 1 week. Then in the next segment, we'll move on to look at the calendar, to look at what are the upcoming events or data to take note of. And finally, the last segment, we'll move on to the charts to look for any trading opportunities. Feel free to type in your questions. I will take them along the way. Okay, for last week, the data wasn't that much. But some key things to take note of is the dollar has made a 8-month high against the yen especially. So of course, the reason is because of Fed rate hike bets. That was last week. It was as high as 100%. So the market is pricing in a confirmed rate hike last week. So that's why dollar yen shot up pretty much to close to 114. It was, if I'm not wrong, less than 10 pips or close to 10 pips away from 114. So of course, market open this week. Later we'll talk more about it. But that is one of the key things to take note of last week. Of course, on the other side, gold as well. In the last couple of weeks, we have seen quite a close inverse correlation between dollar yen and gold. Of course, the main reason is because of rate hike, dollar strengthened. So on back of rate hike expectation, dollar strengthened, gold drops. So gold dropped to a 9-month low. So there's no coincidence. Dollar yen went to a 8-month high, whereas gold went to a 9-month low as well. So there's some key things to take note of. Let's move on for oil as well. We have seen oil so-called slide to 46. This is WTI, went to about $46 a barrel. So of course, later we'll move on to talk about the OPEC meeting this week. But one thing to take note of, there's some skepticism over the OPEC output deal, which they will decide on Wednesday during their meeting. So since the start of this year, we have been talking about some production freeze, and time flies. So we have seen how some of the OPEC nations or the non-OPEC nations, the oil-producing nations, has been going back and forth on their intention. And also we have seen in the past webinars, we have talked about some of the disagreement between OPEC or oil-producing nations regarding on their output levels and things like that. So if you ask me, I don't have quite a optimistic outlook about their deal that they will come up with on Wednesday. It is quite unlikely to have a very attractive deal that will push WTI back to the $52 a barrel kind of level. So later, if some of you are keen, you can request, we can take a look at the oil chart as well to see whether there are any trading opportunities. So this is something to take note of for oil, in case on Wednesday, if you are trading oil, take note of the OPEC meeting. So if they make some announcement, it could possibly cause some short-term so-called volatility in oil prices. The other event to take note of this week is a political event, but we know that political event has an indirect impact on the markets, the financial markets or the currency markets as well. So this is the Italy Referendum. it will be held over the weekend on 4th December. So this referendum basically is to vote for the constitutional reform proposed by their Prime Minister. So the interesting thing is the Prime Minister has made known that if he failed to garner the support from his people, meaning that after the referendum people reject his proposal, he will resign. So imagine a Prime Minister of the country resign. That could that will cause some uncertainty to the country. And Italy being the third largest economy in Eurozone, that will definitely have some ripple effect on the euro as well. And another thing to take note of, interestingly, is some people view this referendum as a vote for Italy to remain in EU or not. So it is like a, how should I say, a prelude to that. Some people has that view, so that's why it has a great impact or a great pressure on the euro if the referendum vote against what the Prime Minister proposed. So in the last poll that is being made before the actual referendum, the requirement or the regulation state that there will not be any poll 15 days before the referendum. So the last poll was made about 15 days ago, or rather close to 2 weeks ago. The last poll is still a no vote. So a lot of people is expecting the Prime Minister to lose the referendum this weekend. And if it ever comes true, then it will depend whether the Prime Minister really stepped down as what he has so-called promised. So of course, the immediate reaction to the market, or those of you who are trading, to take note of this event because it's held over the weekend, means that there's potential risk of gapping over the weekend for all the euro pairs. So if you have any open positions that you have hold on for the week, and come Friday, please remember to manage your risk and remember this event. You may want to consider closing out your position to avoid any so-called gapping risk. But if you have an opinion that the referendum result will favor your so-called position, then you may want to take advantage of any possible gapping by removing any profit targets. Okay, you will not be able to take advantage of gapping if you remove your stop loss, because that is quite a disastrous thing to do. So I would not really suggest removing stop loss for any trades over the weekend. So although if gapping happens, your stop loss may not be respected, but it will still exit your trade at the best price, versus the very worst case scenario where you don't have the stop loss, the trade won't exit until it hits a margin call or you have a stop out situation. So it is not that favorable to a trader. So if you want to take advantage of gapping, what you can do is remove your profit target so that when it gaps, you can take the full advantage of gapping. So this is just a highlight for all of you to manage your risk if you have any positions in euros. Next, we'll move on to the calendar for this week and see whether there's any trading opportunities. Of course, the first one over here on Tuesday, the timing that is shown on the calendar is GMT +8, which is the time zone that belongs to Singapore, Malaysia, China. So the first suggestion over here is the US gross domestic product, GDP. So market forecast is 3%. So this is the suggestion pending short dollar yen. So dollar yen has moved out quite a fair bit and retraced from the high of about close to 114. So market is still pricing in very much a rate hike next by mid of December. So this would be one of the data that market could be watching if the actual GDP is very much worse off than the expectation. Then market will start to scale down any rate hike expectation next month. So as you can see, the suggestion is less than 2.1%, meaning the actual data has to come in at 2% to fulfill the criteria. So yes, the criteria could be quite ridiculous if you look at it. The GDP expected or forecast is 3%, whereas the criteria is 2.1%. Why? Some of you may ask me, why do I set such a ridiculous criteria? So sometimes I need the criteria to be ridiculous so that the move result from it would be significant for us to take a certain amount of profits. That's my gauge. So if the result comes in at about 2.5, 2.6, yes, it's worse off than expected, but it's still a positive figure. Market may choose to so-called react lesser as compared to a very far off kind of actual figure. So this is the criteria that we suggested. If the actual is less than 2.1%, that is for pending short dollar yen. So on Wednesday calendar suggestion, of course, on Wednesday it will be an OPEC meeting. It's highlighted over there. So in case some of you are holding on to oil position, do be aware that of the OPEC meeting, and any announcement will have volatility in the oil prices. So if you intend to trade oil on Wednesday, also look out for any announcement made by or after the OPEC meeting. So at night, 21:15 hours, that will be the Adp Non-Farm Payroll. So Adp is known to be the preview of the actual non-farm payroll. So the suggestion is the forecast or market consensus is 160K. So the suggestion over here for Adp would be a pending short dollar yen in case the actual number comes in lesser than 120K. So there will be a pending short on dollar yen. Next on Thursday, a suggestion for UK. This is the manufacturing PMI for for UK on at 17:30 hours. So market is expecting slight improvement in their manufacturing PMI, 54.5 versus the last figure of 54.3. So the suggestion is a pending short on a pound dollar, expecting worse than expected. So the criteria that we suggested is less than 52.0. So it has expanded. Less than 52.0 means it has expanded lesser than what the market expected. So that's the criteria. If it's less than 52, a pending short pound dollar. So if it doesn't fulfill this criteria, you may remove the pending order. Next come the big day for Friday. So that will be the non-farm payroll. Why is it a big day? Because it's more or less the last or the final hurdle before the FOMC next month. So after non-farm payroll for the next maybe 2 weeks, there would not be much so-called key US data that could possibly change the mind of FOMC. So the most likelihood data that could alter the FOMC decision would be the upcoming non-farm payroll. So market is expecting a favorable number at 174,000 for Friday. So there are 2 suggestions for you to choose. Again, I do not or we do not really suggest a pending long and short at the same time. So take your pick, choose either camp. The reason, again, I like to highlight in case some of you have not attended my past webinar, why I do not suggest to put a pending long and short at the same time. The main reason is because non-farm payroll is the most traded news worldwide and one of the most, if not the most, volatile news in the world. So anything can happen. Spread widening by the banks, sudden slippage or gapping that happens at the point of the data being released. So if you have both pending long and short at the same time, it may encounter a situation whereby both pending orders are being triggered almost at the same time. Because we may not have the time to react. It's within a few seconds. So before you can even delete one of the pending order, it would have triggered the order. So if you have both pending orders being triggered, then you will be locking in at a loss, and it will be a tough decision how to exit out from the situation. So instead of putting yourself in that kind of tough situation, a better or a wiser decision is to choose either camp. It will be easier to manage. So the first suggestion will be pending long, expecting favorable figure. So this is a pending long dollar yen if the actual is greater than 180k. So in my opinion, we don't need to see a very big jump or very big deviation from the market expectation in this scenario, because I think that as long as the number comes in above the forecast anywhere around 180k or more, market will really put in the 100% expectation of a rate hike again back to the price action. So if dollar yen hovers around 112 before non-farm payroll, it means that if the actual number comes in 180k and above, I would expect that dollar yen to move towards 114 again. So it may not move that much, but definitely you will head towards that and give us enough pips to take some profit out. So that is one suggestion. Of course, the other side, pending short, I'm setting quite a low or quite a high threshold for this criteria. I think there's a typo in the screen. Just give me a moment. I will correct the typo error. Fantastic. Let us continue. So the criteria for pending short, it is if the actual figure comes in less than 100k. So it is quite a drastic deviation from the actual number. Again, our rationale is if any figure comes in about 150k or 140k, market may still hope for a rate hike. Dollar yen may not drop as much or as significantly. But if the actual number comes in less than 100k, it is quite a bad number. So we would expect the market to scale out a rate hike in December. So the move in dollar yen could be significant enough for us to grab a reasonable good profit out of it. So that's the reason of us setting this criteria. Pending long dollar yen greater than 180k, or pending short dollar yen less than 100k. So choose either one based on your own preference. Okay, as before we move on to the charts as usual, just to highlight, the accelerator bonus is still ongoing. In case you have not taken advantage of it, feel free to visit our website www.fullertonmarkets.com/promotions to look at this exciting promotion, and also the terms and conditions that comes with it. It is simple. It is not a lengthy 10-pager kind of terms and conditions. Very simple terms and conditions for you to fulfill in order to get this bonus. And the reason why you have been seeing this bonus almost every week is because it's popular, it's in demand. So Fullerton Markets decide to continue to offer it to our clients. So if you have not taken advantage of it, please check it out. And if you do not have an account with Fullerton Markets, feel free to open a live account with us as well. So we'll move on to the final segment, and we'll look at the charts for any trading opportunities. So as usual, feel free to type in your requests, the symbols that you want me to look at, and the time frame. So while you are typing in the request, what I'll do is I will just do a quick review on the 4 charts that we have looked at last week. Of course, the first one being the pound kiwi. So my comments are on the screen as well. So I mentioned that I do expect the pair to be range bound for last week. So of course, towards the midweek or the end of the week, or the second half of the week, price starts to move out of the range. But for pretty much for the first half of the day of the week of last week, the pair still respects the so-called range. Of course, why the sterling strengthened beyond the range is because there's some news out from the UK, and there are possibly some stimulus or spending that the government may be looking into to boost their economy. So in summary, that's why we see the sterling has been holding on quite strongly, even against the US dollar. So that's the sterling kiwi chart that we have looked at last week. Next, for dollar yen. So this was my expectation is I do expect some possible profit taking last week, but instead the profit taking took place early this week instead, as the opening of this week. So as you can see, my comment is possible to apply counter trend strategies in lower time frame. So for those of you who know me for some time, you know that I'm not a very good counter trend trader. And this is a classic example for counter trend. And I learned from my mentor Mario. We are both more or less a trend trader rather than a counter trend, because both of us sort of agreed that in a trend, if you trade along the trend, you could be right most of the time, maybe wrong one time when the trend reverses. So this is a classic example, as you can see, since we are looking at this chart. So as the price move up, So market has moved up. You have seen this is a daily chart, 4 days of a bull movement, and the market pause. So a trend trader most likely will look at a long opportunity. Of course, a counter trend trader may be looking at short opportunities. So you can imagine what happened if you go counter trend in this case. Possibly you could make some money, but the chances of hitting stop loss will be high as price move higher. So then again it paused again. Again, if you try to take a counter trend, chances is you may not have the chance to exit before it hit your stop loss. So a trend trader again will be looking at opportunity to take a long. So price push up further. So the third time the price pause again, if for counter trend trader will be looking at shorting again. And of course with this example, price again push higher. So in this example, you will note that for a trend trader, you have plenty of opportunities to enter and take profit. Whereas for counter trend trader, it will be quite risky in 3 instances. And of course, by the 4th instance, when the market paused, if a counter trend trader would have taken a loss in the past 3 trades, he or she may experience some fear in taking this 4th trade. And Murphy's Law has it that the 4th trade did sort of some counter trend move, and he would have missed that profit out. So this is one classic example that have showcased to me, at least I'm a trend trader, to tell me I should follow my trend trading methods. So of course, again, it doesn't mean that counter trend doesn't work. There are always people who are good at it, and they can able to tell when it's a good counter trend trade to take. So this is the dollar yen. Of course, I mentioned it would be a possibility to take a counter trend short-term trade. And this is a daily chart. So if you take it at a lower time frame, depending on the counter trend strategy that you are using, if you have gotten some 20-30 pips move out of it, congratulations. Then if you have hit a stop loss for whatever reason, at least you set a stop loss. Otherwise, the next push upward would be quite disastrous. It has moved about 200 pips up. So that's a dollar yen chart that we have looked at last week. The next chart we have looked at is actually the euro dollar H1. So for this chart, I have given a more specific suggestion. So possible to short if a bear candle closes lower than 1.0625. It is quite specific. So the red dotted line is the time of the webinar. Okay, if for those of you recall what I have said in the last webinar, so I mentioned the 3 so-called, it looks like a spinning top kind of candlestick, or a doji kind of candlestick pattern. So I mentioned in the last 3 hours there's a fight between the bull and the bear. It was a draw. So the next time either the bull or the bear wins, chances is it could mean that the market may move in that direction. I also mentioned against going long on euro dollar at that point in time because of the trouble in euro and the dollar strength. So couple all the reasons, that's why I suggest a possible short if a bear candle appears. So it did appear, I think, 1 hour later after the webinar. So as you can see, this bear candle over here, let me zoom in a little bit bigger so that you can see. So this bear candle over here, it did close and around the blue box as well. So it did fulfill the criteria for short. So if some of you have taken a short, price move down, I suggested a stop loss over here and take profit at the bottom as well. So you will notice that the tail just touches the blue region, it is estimate, and price starts to reverse. So in such situation, usually what I'll do is, if I see that the price miss my intended target by, this could be a few pips, Murphy's Law, and price starts to sort of reverse backwards. So my usual habit is I will shift my stop loss to the break even. I don't want to lose any money in case for whatever reason market reverse all the way up. So once I see that the market missed my target, I'll start to shift my stop loss. And usually if you trade your hourly candle, you will have like a window of 2 to 3 hours for you to adjust your trade. It doesn't mean that you have stare at the chart every other minute. So as you can see over here, every candle is 1 hour. So it's missed the target and another 2 hours before it goes back to even the entry price. So for a trader who have taken, or me who have taken this trade, I have a window of 2 to 3 hours to adjust my position. So this trade I've hit a break even because I shift my stop loss downwards. So if I have not shift my stop loss downward, you could have imagined that over here as the spike goes up would have hit the stop loss before it goes down again. So of course, some of you may have taken the profit even before it hits the profit target as usual. So regardless, I hope that some of you who have taken this trade will have at least gotten out at a break even or grab a few pips as a consolation price. So the fourth chart that we have looked at is Aussie Dollar. So Aussie Dollar, I've sort of marked this so-called possible resistance. So my suggestion is actually for the retracement to hit somewhere to the resistance. Once it turns down, possibly to take a short. That is one way of price action kind of trading. Alternatively, if we use if you want a more objective way, is to use an indicator, for example, oscillator of stochastic. So once stochastic goes above to the overbought region, once it turns down, possible to go short. So if this is the possible resistance, you will notice that for both stochastic to turn down, it has to be this candle. And if this is the resistance that we are expecting, theoretically speaking, possible stop loss should be beyond the resistance, because if this is the resistance, there would be a chance that for the price to go back to hit the resistance before going down. So placing your stop loss anywhere below the resistance would not be quite a correct stop loss in my perspective. So if you place a stop loss in the blue box above the resistance, that could mean 100 over pips kind of stop loss, and the potential is for the price to hit at least the last low, which is around only 60 pips. So this would be almost close to a 2:1 risk reward kind of trade. It may not be a favorable kind of risk to reward kind of trade to take. So even though with the indicator telling you, oh, it could be a possible signal to go short, And just by measuring the possible stop loss that you will put and the potential so-called profit that you would gain, if you see that the risk reward is not in your favor, you can always choose not to take the trade. And now we have seen that on the price action, price has sort of moved to the so-called resistance or possible resistance that we have highlighted last week, and price starts to turn down. So for those of you, if we want to take a trade to go short, then one of the possibility is wait for confirmation of this candle before taking a short. And the stop loss will be somewhere here, higher than the last high. So it depends on how the candle close. So if it closes around this level thereabout, if you take a short, and most likely your immediate milestone or the first target would be this, with reference to the last immediate low over here. So just by looking at the boxes, a rough estimation, this could be a risk reward 1:1, or slightly better than 1:1, maybe 1:1.1 or 1.2 kind of trade. So of course, bearing in mind that this week, for dollar strength, a lot will be depending on the upcoming data, GDP, ADP, and non-farm payroll on Friday. So a lot of data would be influencing the dollar strength. So that's the Aussie dollar that we have looked at last week. So for this week, let's check out the requests. Oh, interesting, there's a few requests on Aussie dollar. Since the request is on daily chart. Okay, interestingly. So let's look at, I shall remove all this indicator and look at the daily chart as requested. Okay, so this is Aussie dollar daily chart. On a daily chart, of course, the most clear-cut trend is the recent about 2 weeks kind of move. Aussie losing out to US dollar. So the main reason, of course, rate hike expectation. So for this so-called strength to continue downwards for at least for another 2 weeks until FOMC, that will really be data dependent. So let me draw, I'm just using a Fibonacci to take a look at whether there's any levels that coincide with the Fibonacci. So coincidentally, if you look at the Fibonacci 38.2, seems like the shadow over here respect the 38.2 level. Okay. But to trade the Aussie dollar on daily chart, it really depends on this week's pattern, or rather, my apologies, this week's data. If it's favorable for the next few days up until FOMC in mid of December, it is possible to see Aussie dollar heading back to the 0.73 level. Okay, towards that level. So I'll put my comments. So this is my comments. So leading up to FOMC, which is mid of December. So there's daily chart if you want to. Not so much of a technical trade, it's more of a fundamental driven trade. So of course, after FOMC, what happens to Aussie dollar, that will be a bit far to tell, but after FOMC, we know that the currency market will be approaching its traditional holiday season towards the Christmas and New Year period. So chances is price may not move as much during the last 2 weeks of the year. So we shall see closer to the date, especially after or immediately after FOMC. So that is for Aussie dollar daily chart. So of course, for short term, let me just put back the Aussie dollar H4 chart. Maybe we could do a review next week, since we talked about it just now. I just put back the level, okay, which is like I say, I'm not so particular about the exact price point of the level. Support resistance are region to me. So usually I look at, they are usually close to round numbers. So in this case, 0.7480. So just to recap, I think if the candle close around this price for this candle, so this candle should be closing in about an hour's time. Another 1 hour and 10 minutes, that will be the closing time of this candle. So hopefully it doesn't close way low below, because if it close way low below, the risk reward for this trade may not be as favorable. So hopefully it gives us a good risk reward kind of trade. So suggested target, at least the first target. So suggested stop loss is where the blue box, roughly there about, and suggested, I would say, the first target. Reason being, this is a minor or the most immediate support as I can see. So why we say first target, it is up to trader to manage. If they want to close out all their positions, it is fine as well. But if you want to anticipate that there could be a further push downwards towards 0.73, possibly you could manage your position and take advantage of a further move if required. So that's why I put there as first target. So this would be a suggested short trade for Aussie dollar, a technical trade. This is more or less a technical trade. So let's look at the next request on my screen would be the pound yen H1 chart. Okay, so this is the pound yen H1 chart. So of course yen is pretty weak recently, so there's a bit on a risk on kind of effect after Trump's so-called election. So the risk currency is so-called rebounding or performing well against the US dollar. When you see that the US dollar perform better than yen, so there is a clue of a risk on as well. But for pound yen, if you have to look at this week's data, UK has a few PMI that is coming out. So one of it I have highlighted and suggested a trading opportunity earlier on. So UK has two key PMI at least this week: manufacturing PMI, construction PMI, the standard 3 PMI, and services PMI. So this is the 3 key PMI for UK. So short term, if the data is better than expected or good data, then possibly the sterling may continue his strength against the yen. So for H1, as you can see, the pullback is happening now. Okay, the based on the chart, the momentum of the upward trend is losing. So if you draw a trend line, there's a very much for a trend line trader, you could possibly draw something like that. As you can see, there's a few reference point over here to draw an uptrend line, and coincidentally it has been quite well respected, so-called. One reference point over here. I'm marking all the reference point in case you are not sure what I'm referring to. And you will see shadow going beyond it, but no shadow touches it. Oops. Okay. So it has 5 so-called reference point respecting the same trend line. And the same one is closing to as the price approaches the trend line. So a simple trend line strategy, of course, there's no indicator involved, and depending on the current candle, let me zoom in. Okay. So this, as you can see, as I zoom in, it doesn't give you the same perspective as a zoom out effect. So I personally like to look at chart in this perspective and this size of candles. So it will give me to me a broader perspective of how the chart is moving, enough candlestick to determine. So the reason why I'm zooming in is for the benefit of all of you who are watching it on the screen, in case you can't see the candle if the resolution is not as good. So I zoom in to make the chart, look at the candlestick, more visible. So a suggestion over here would be, of course, any reasonable stop loss for trend line strategy would be to place it below the trend line. So that would be a suggested stop loss over here. Below the trend line. And Possible entry on after bullish engulfing pattern. Okay, it is forming a kind of bullish engulfing pattern over here as I highlight. Let me change the color of the box so that you won't get confused with the rest of the other boxes. Okay, this is a blue hollow box where I box up these two candlesticks, a bear candle and a current bull candle which is still moving. So possible entry after, so it doesn't mean as the candle is moving, that means it's not confirmed. So maybe in another 3 or 4 minutes when the candle closes, if it's still a bullish engulfing pattern, meaning this bull candle is longer than the bear candle over here, the body of the candle is longer than the bear candle over here, it means it's a bullish engulfing pattern, then possibly that could give us an entry to go long on this trade. Okay, this is a trend trading. So this would be a stop loss, suggested stop loss just below the trend line. This is possibly 100 and about 120 pips trade. So pound yen is considered one of the more volatile pair, or rather any pair that pairs against sterling is known to be volatile. The amount of pips that it moves tends to be slightly more as compared to the other pairs. So there's another 5 minutes before, or rather 4 minutes before the candle closes. So what I'm looking at is market watch in the top left corner over here where my cursor is. You will see the clock of the server. So the server time is as is our candle, we just look at the minutes. So it's 56 minutes and 20 seconds. It means it has another 3 odd minutes to go before the candle closes. So I'll move on to the next request on my screen. So if there's any more requests, feel free to type it in. I will take them along the way. Don't be shy. So the next request that is appearing is, oh, that is gold. Yes, gold would be interesting as well to trade leading up to the possible rate hike or first rate hike of any major central bank of the year. Okay, for gold, is there any preferred time frame that you want me to look at? Okay, if don't have, never mind. I'll just pick a time frame that I feel that would be nice to trade. Okay, just to give all of you some perspective, as you can see over here, the gold prices has broke a 1 year, more than a 1 year, it's close to a 1 year low. Over here is early this year, February, early Feb 2016. This is the low, the current low is almost the same as early Feb. So this is a weekly chart. Okay, as you can see over here. So just to give you the perspective of a weekly chart, so gold price has been dropping, retrace upwards because market scaling back on a rate hike expectation, as you would have seen what had happened for the first half of 2016. And now market is speculating a rate hike again. So that's why price, as you can see, the amount of move that gold has dropped, it is telling you that the market is pricing in a high chance of a rate hike in December. Of course, if it really comes true, a rate hike really happens, it may move towards the previous low over here. It may, but a more realistic so-called price action would be somewhere in the middle. Reason why, even if there's a rate hike in December, you will not push all the way down, because most likely market is looking at the next one already. Okay, market is very forward looking, so now they are pricing in a high chance of a rate hike in December. So if it is really a rate hike in December, the amount of price move would be, it will not be a lot, but definitely enough for trader to grab some good profit out of it. But at the same time, market will also be looking at the press conference to look at the future of the next rate hike. So that's how market, or how the trader, or rather the traders or the big investors would do. So they are always forward looking. Once the event is past, they will move on to the next one. So this is gold, as you can see, the price over here. But let's look at a lower time frame, because to trade a weekly chart is just not that practical. You have to wait 1 week just for one candle. But that gives you a broad overview of how gold has moved. And now I'm toggling through the time frame to see what would be some possible trading opportunities over there. Okay, a lot of uncertainty, as you can see in the near term. I'll mark some levels for considerations. Okay, gold tends to be one of the more volatile so-called instrument. Typically, characteristics is there are long shadows appearing, especially on H1 chart. Okay, I'll mark some regions for your reference. Okay, I'm pretty much expecting gold to be driven by data again this week. Okay, so from now until the three data that I mentioned, GDP, ADP, and non-farm payroll. So all in all, I'm expecting good numbers out of all these GDP and employment figures. GDP, it should, I'm expecting it to come in around the 3% consensus, 2.9 or 3.1, that kind of region. And of course, ADP not so much, because sometimes as the sampling size is smaller, so sometimes it may not be such a good gauge for non-farm payroll. But in very short term, in that 1-2 hours immediately after the news, price may move, but after that maybe chances is the market will move on and look forward to non-farm payroll, which is the official data. So we have seen instances that ADP and non-farm payroll actually differ, is exact opposite, meaning to say ADP shows a very bad data, whereas the actual non-farm payroll shows a very good data. So we have seen that happen before. So I'm expecting good data out of GDP and non-farm payroll. So for gold to breach 1196 to hit higher, most likely is we are not seeing good data this week. So that's that could be one of the reason for gold price, if it ever go beyond the 1200 region. Okay, 1200 is around this level, is at this level for reference. So for gold price to shoot way beyond 1200, I think the GDP, non-farm payroll, ADP has to really underperform against the market expectation. Then market may scale back the chance of a rate hike next month. So if that happens, gold price may breach the next two resistance over here, 1191, 1196. Other than that, I do expect gold price to still be bearish. I'm still on a bearish so-called bias. So a favorable data could mean that gold price may hit towards the 1182 and 1175. So in a very short term, let me zoom in. Okay. So some of you, if your eyes are sharp enough, you may see a very short term kind of double top formation over here. Okay, you have to follow my cursor. I hope you all can see my cursor on the screen, the black cursor over here. So there's one top over here, move down, and it forms another top with the shadow over there and move down. And price sort of close below the neckline to move lower. So it is forming a sell signal. So if you want to trade this pattern, then you could consider a short now. It is if you ask me, this is the let me just change the color. So roughly around here, not so particular, because to me, candle has already closed below the neckline. So anywhere around this price, you could just possibly take a short if you want, or you have you shared the same opinion as me, then you could consider this short. But a conservative stop loss would be beyond the two shadow over there. Or close to the 1200 level. So of course, judging from this, your first target would be here, and your next target would be here. Suggested targets. Okay, so this would be the suggested targets. Of course, this would be the suggested stop loss. Of course, by looking at this, the risk reward for this trade would only be favorable if it hits the lower target. So it is your choice again to make. So the first target would be the first milestone. If price really hits that, you could consider to shift your stop loss to your entry price to protect your position. So that would be the plan for this trade if you ever choose to follow. So that's Go H1, my suggestion. So let's look at let me see. Okay, there's a question. Are my current and previous webinars recorded and available for replay? Yes, they are. So it is available to all Fullerton clients. So if you have a live account with us, you can just access all the videos by logging into Fullerton Suite. There's no time limit. They are all uploaded to online, so you can view it just by logging into Fullerton Suite. You can even watch it over your mobile phone as well. So it's very convenient. So all our webinars are uploaded there. A value add to all Fullerton clients. When will the interest rate decision be announced in December? It will be 15th of December, early morning, GMT plus 8 time zone. US date will be on the 14th of December. So that's the scheduled date. But closer to the date, my webinar will be talking about it as well, definitely. Especially on the actual week itself. There's a question, pound yen buying good, okay. As a trader, I've come to a realization there's really not a good or bad trade to take at the point of time. There's only whether the right trade to take or the wrong trade to take at the point in time. Meaning to say, are you following the rules or your rules to take the trade? So as you can see, we are back to pound yen. It forms the bullish engulfing pattern already. So I marked the vertical line. So exactly at the box that I have indicated earlier on. So it is your decision whether you want to take this long trade. And the stop loss will be at the blue box somewhere there. So this would be around 110 to around 120 pips kind of trade. Of course, the first milestone would be always reference the last high and slightly lower. That's what I usually do. That's the first milestone. Or the first milestone usually will tell me when to shift my stop loss to at least my entry price. So of course, since this is a trend following kind of trade, personally I would keep it as open take profit and do a manual trailing stop for your so-called consideration. Okay, so this is pound yen. So there's not really a good trade to take or a bad trade to take. It's really whether you are following your plan or not. Because whether the trade is good or bad usually is after it exits If it hits profit, everyone will say it's a good trade. If it hits a stop loss, everyone will say it's a bad trade. But at the point of taking a trade, there's no way to tell whether it's going to be a good trade or a bad trade. So the next question on my screen. Okay, when to break even? So I believe I've answered your question on the pound yen. Okay, the blue box over here, which is, let me give a rough price. Maybe around 140.80 thereabout. Even if it gets close to it, that would be the signal for you to shift your stop loss up. So that would be about 110 pips away as well. So that will be the first milestone for you to decide whether to close out your trade totally or take a partial profit and shift your stop loss. Does FM have a forum platform for all its members? Currently, unfortunately, no. Because we are a brokerage, we are not really a social trading so-called platform at this moment. So currently, we do not have a forum platform for our members. So of course, if there's a lot of requests coming in from our clients, definitely our company can considering setting up one. But at this moment, we do not see the need because we have our business development managers that work closely with our partners and our clients. And so far, based on feedback that we gather, there's not much of a need for a forum platform. So we don't have that at the moment. So, but if you have any questions or if you need any assistance, you can always approach our live chat, which is available 24 hours a day, Monday to Friday, as long as the market is open. So our live chat follows market opening hours. Great. If there's no further questions, we have come to the end of my webinar. So time flies. So again, on behalf of Fullerton Markets, I thank you everyone for your kind attention. And I look forward to seeing you next week, same time, same channel. May the pips be with all of you. And so this is Wayne signing off. Good night and bye-bye.